Hello, this is the TradeSight Forex Market Preview and U.S. Economic Data Roadmap for the week beginning Sunday, March 2nd and ending Friday, March 7th, 2014. Hard to believe we're already through the first 2 months of the year. Charts, as usual, brought to you by eSignal 11. Here's a look at the pound dollar. Actually, let's jump back first to the U.S. dollar index, and you can notice that we finally got a little bit of a move on Friday, but look at this range. It continues to just be horrible. Posting our results for the month, there was not much there. I mean, it's just way too narrow in here when you got the dollar index in a 1.5 range for 1 month, let alone 4 months now. Look at that, November, December, January, February. I can't remember the last time I've seen this. It's interesting that the 13 signal still did top us out. We just haven't really moved down like you would think. Did get a 9-bar setup to the downside, so we have a new static trend line up here. Pointed that out last week. And the interesting thing, if we head down here, is going to be what we do with this static trend line, if that just becomes sort of a target. Remember, technically speaking, even though the 13 has really run its course at this point, the support level from that whole energy base is going to be that static trend line. But we'd really like to get out of these ranges. I also point out that the average ranges on some of the pairs has dropped so low. The euro is now down to 6-month average of 80 pips per day. That's as opposed to 120 to 130 is the norm. The pound's only a little bit better. So, this is just not a big time for Forex, unfortunately, and we'll continue to trade half size. It's just been that we've been there since late August. We had nice months at the back end of the year, though, as anybody's checked our results knows. But anyways, we will be. We've had pretty much a flatter January and February in terms of results. Just can't keep going when the ranges are as narrow as they are and expect to get too far. Here's a look at the euro dollar. Looks like it's going to break out here. Look at the static trend line, though. It's right on it. Look at that close. It's amazing. So it had used this as resistance before. What's interesting about this to me is it's not this high from back in October. It's a point a couple days lower, right? And it's using it so specifically. That's the power of that seeker and comer tool that we use, letting you know where those levels are going to be. There's no other way to get that information. Here's a look at the pound. Talk about flat for the last couple of weeks. You're going to love it when we look at the intraday charts on these. And here's a look at the Aussie also. Oh boy, look at the month of February in the Aussie, except for that second day. I mean, that's disappointing. All right, let's take a look at the intra-week action. Here's the pound dollar for the week in 30-minute bars, and you've got a high of 67.60 basically and a low on a spike of 65.80. Realistically, 6600 is the low. That's 100, even if you take the whole thing, it's 180 pips of range for the week. And look at these moves. They don't even exist. I mean, one little news spike in reverse. Remember that on Tuesday. So this is from the open on Sunday, and boy, this is just really, really poor action. Hard to make money when nothing's going on in the market. Here's a look at the euro dollar, and again, we finally get a move. We did have one winner earlier in the week, but we finally get a move, and it's on a news spike, and it's tough to get fills in that. Other than that, look how narrow this is. I remember coming in one day this week thinking I wake up here in the U.S. in the morning hours over here in the U.S. and thinking something was wrong, that the platform wasn't moving because the charts looked so flat. But nope, that was the actual overnight action during the prime time for the euro dollar one night. That's just unbelievable. And so many days here where not much is better. Total range for the euro was about 180 pips for the week. Remember, again, that's the problem. That's for the week. If you look at most of these days here, I mean, there was a day, I think it was Tuesday, total range was like 50 pips. Back here, 60. That's what's bringing the averages down. And there's no room to make money at any significant level. If I look at our results for February, where we ended up with a decent percentage for winners, but it was also less trades triggered than usual. A couple nights without any triggers. We had some news spike issues on the triggers, and some alerts going off there, obviously. And so, in general, just a choppier environment. But the real problem is this month in particular, more than any other month, we had no follow through on any trade. We didn't have a single trade that kept going for a couple days like we like to let our trades run. They just couldn't move because the market didn't move. So nothing you can do about it, but it is what it is. Let's take a look at the data coming out this next week now and see what we can get ourselves prepared for. Keep in mind, next weekend, March 7th, is going to be the time change. So part of the world changes here in the U.S. We're going to shift times, and that'll throw the technicals off for a day or two. But starting with Sunday, we've got the Overseas Trade Index out of New Zealand, the AIG Manufacturing Index out of Australia, MI Inflation Gauge out of Australia, Capital Spending out of Japan, Aussie HIA new home sales. China's got their non-manufacturing PMI, final manufacturing PMI. Commodity prices out of Australia going into Monday. Spanish, all the manufacturing PMI data out of Europe, UK, everywhere. We've got mortgage approvals out of the UK, RMPI and IPPI out of Canada, along with personal income and spending, and the core PC price index, which is an inflation gauge. Won't be any, of course, here in the US in the morning on Monday. Final manufacturing PMI, that's the ISM number here in the US. Construction spending, and then total vehicle sales in the afternoon, that's 2 p.m. Eastern Time. Monetary base out of Japan. ANZ commodity prices out of New Zealand Monday night. Building approvals out of Australia, along with current account. Average cash earnings out of Japan, and then the rate announcement out of the Bank of Australia. 10-year bond auction out of Japan. Going into Tuesday, Halifax HPI and construction PMI out of the UK. PPI out of Europe. We've got the gross domestic product out of Australia that night, so no data in the US really on Tuesday. Services PMI data across Europe and the UK. Retail sales and revised GDP for the fourth quarter out of Europe. Going into Wednesday morning here in the US, non-farm employment change, that's the ADP number. Final services PMI data. Got Bank of Canada's got their rate announcement. ISM non-manufacturing number here out of the US. Crude oil inventories, beige book, speech from a Fed member. That night, retail sales trade balance out of Australia, 30-year bond auction out of Japan. Then we hit Europe. We've got the retail PMI. We've got bond auctions out of Spain and France. We've got German factory orders, rate announcement out of the Bank of England. Seems like we just had that, but there it is once again. And that means, of course, right after it, the one out of the ECB for some European one. So 2 rate announcements that night. They're usually on the same night. Building permits out of the U.S. Unemployment claims, that's the weekly number on Thursday. Revised non-farm productivity and unit labor costs here in the U.S. Factory orders in the U.S. Then Natty Gas. Canada's got their IV PMI number. We've got AIG Construction Index out of Australia Thursday night, and then a big day Friday. Leading indicators out of Japan. Unemployment rate out of Switzerland. German WPI, French trade balance, the CPI out of Switzerland, consumer inflation expectations out of the UK, German industrial production, and we roll to the US side where we've got, check this out, trade balance and non-farm payroll and unemployment rate. So that's really 2 numbers, right? The unemployment rate with the NFP data that come together. That's one of our big 3 every month, and the trade balance is one of our big 3 every month. So we would be half size ahead of that because both of those hitting at once is going to really shake the market. You don't want to be triggered right at those moments. Usually best to cancel all orders if you're not in something well in the money already at that point in time. But that gets rid of 2 of our 3 for the month already at one point. We've also got the unemployment rate out of Canada at the same time and labor productivity out of Canada, and then consumer credit in the afternoon. Trade balance out of China, CPI and PPI Saturday. Why they do it on Saturday, I have no idea. And then again, remember Saturday night, we're going to be going into daylight savings time change here in the U.S. Actually, they don't list it here, but it is. It's Saturday, March 8th, going into. Oh, there it is. Going into Sunday, March 9th. Just the U.S. and Canada for now. All right. So the main thing to be aware of this week, obviously, we're going to stay half size. The ranges don't don't justify boosting our size up to bigger trading at this point in time. And the big data is going to be on Friday, but you do have 2 rate announcements out of Europe going into Thursday. Hope you have a great trading week. We'll be here to help you in the lab. Have a great weekend.